All right, everyone. Thanks for joining me here today. What I wanted to do was talk about the pre-market playbook charts that I put out this morning because it's a really good representation of how I approach the market every day and what I'm looking for, the key battle lines between bulls and bears, and just identifying where potential bulls and bears are attempting to get to get some action. I mean, where are they trying to enter the trades? Where are they trying to defend those trades? Where are they going to be wrong? And just identify those key inflection points in the market. So what I did right here in this chart, you can see the pre-market playbook chart that I provided for crude oil this morning had 91.80 obviously as that key level right here. And anytime I draw this type of box with a V bounce or a break, that's telling you that's a key pivot. And in this case, the bulls own that pivot at the moment, but if they give it up, you're likely going to see their stops get run. And that's kind of how I approach every single one of these charts. Identify the key pivots in the charts and see where those buyers or sellers are likely to position themselves, and then see who's winning the battle at that pivot. In this case, I mentioned up here that the sellers continue to defend 92s. So if you're a bear, you want to be defending 92s when price comes into that zone. And they're looking to run the downside stops through 91.18 for a shot at expansion targets below. That's basically what that line means when I say right here. Sellers continue to defend 92s and are looking to run the stops at 91 for a shot at expansion targets here. Okay. Now when I'm talking about the bulls, now I'm saying, okay, but the bulls, they have their own game plan. They've been defending 91.20, 91.18. That's the center of that key range, and 91.20 has been our key level for several days. So the bulls, after trapping bears down here, remember that was part of the game plan before, after trapping those bears, they come up here and they start to defend pullbacks to 91.18. So the idea here is that buyers are defending 91.18, but I wrote 91.10 in this case this morning, because 91.10 had a much better LVN. It was also a 5-day value low, and it was just below those morning lows to kind of run those stops a little and then get the buying back to the upside. So 91.10s there was the level where I said look to buy that area for a shot at 92 and 92.84. So the first move this morning goes right into that level and bounces into 92s, and then pushes into 92.84 ultimately down the road. So if you're looking at this, let's look at the live chart now. This is what the live chart looked like right here. And obviously when I wrote the key levels early on, what I was looking at was this 91.18 to 91.10, and I had a drawing like this. And I said this thing goes up to 92. And then if they can run stops above 92, then you go up here and get the next one's up. 92.84 is what I said. And look how price went right there. Came within 2 ticks of 91.10. It got to 91.12. And then bounces up to the top of the range here at 92. Remember, 92s was a key level from yesterday. That was the LVN where sellers were defending here. Buy imbalances came in above this zone. So if you look at the footprint, let's take a look at the footprint now. Here's the footprint. This is crude oil. Let's scroll back here to where we were when price was at 92 the first time around. Let's see if I can find it here. I guess it was a while back. Here it is, right there. This is what it looked like when price rallies into 92s on the first test. And in this case, you see price rally into 92.05. That was our key level. Get above it, and then there's a 200 plus buy imbalance on that zone. And that buy imbalance, this red stripe right here, tells you that price goes offered and price drops lower. Once price drops down to here, you still see a bounce here on these trap sellers, and then price tries for a new high, gets a new high by 3 ticks, another large buy imbalance comes in, and then that price gets offered. And on the pullback, another large buy imbalance comes in, but that price was not able to get price to go bid, and instead those buyers that all came in up here, they're all trapped now. You get a large imbalance here, 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 and now here, and price is going down. That's enough fuel right there to get this thing going in the opposite side. And you can see the sell-off we had that ensued after that. So that's really, when you're looking to see how you qualify an entry at a key pivot level or a key reversal level or a rejection level, whatever that key level is that you define, when you're looking to qualify a reversal, a lot of times what you want to see is exactly what you see here. You want to see it push into the level. You want to see buyers come in and a failure to get it to go through that level. You want to see them try one more time and fail, and then you want to see all these buyers right here just get trapped in their trade. And once that happens, let me see here if I can get a toolbar up. Once that happened, look how when price dropped back below this little ledge here at 91.98 and dropped back down, when it came back up, it retested that zone from below. And then a buy imbalance occurred, and then from there it went offward and price sold off. Huge, huge decline from there. So that's really what you want to look for when you're qualifying these entries at these key levels. This is a case where buyers get trapped on these highs and then they get their stops rolled down, but there's other cases as well. Buyers can influence, sellers can get trapped, sellers can influence, but that's really what you're looking at here. So my entire goal this morning, when I was hitting you with the pre-market playbook and the pre-market report, was it's always a running story. It's a running story, kind of like a soap opera almost, of the market. You know, the prior session I was talking about 2 sessions ago or 3 sessions ago to start the week, I was talking about 91.20s. You know, and this is Friday's market. 91.20 was a key level. It held. And then we come into Monday's market. We hold it, and then we give it up and drop. But then when we come back to it, we jockey for position. You see buyers defend. You know, this is a running story that I've been giving you guys on this 91.20, and then I, continue to process whatever's coming into the market and just look to see with my eyeballs what's happening at these key levels. And, you had the playbook right away. The other thing to keep in mind is this thing. It's one thing to draw a playbook where, you overlay it and it's almost soothsayer-like. But it's another thing to add up the points of what you see here. This is a 1-point move up. Sellers came in and defended. If you were a seller and took those 92s, you put it a point back down. That's $1,000 a contract each way. And then if you're still a buyer, you're buying these 91.18s and you write it back up for another $1. That's another 3 point. That's $3,000 a contract. Now you run the stops above 92s and you go right into our 84 target. That's another 85 ticks plus some. Because as you know, if you were looking at my pre-market commentary on the video, I said once we run the stops above 92, you're going to get a move to 92.88 and then 93.55 and then 94. So I gave multiple targets here. So this just scaling right on out. The other thing is when you look at this key range that I had out, this is the key range we've been talking about from yesterday. You've got to see it continue to play out today, because this was the levels that we were looking off of yesterday's crude. Now when you run the stops above 2 days where sellers were coming in to defend, these were the levels right here where I was talking about. Sellers coming in to defend for 2 straight days, but the buy stops are now building above that zone. You take the buy stops out, you run it up, and look how it just goes right to each of the expansion targets like clockwork. So you've got to see this thing play out for a couple of days now. The other thing I wanted to show was how nice the NQ was as well. So not only do we do crude oil, we have the ES and the NQ. Obviously, we've been talking about 72s being held, and if we could run the stops above 1980, you can get up back toward 87 and beyond. So bulls are looking to run the stops through 1980 for a retest of the HVN at 87 and beyond. So when you're looking at this, again, this is just 1980 again. Here's 1980 right there, right here. And you can see how sellers were coming in to defend that zone between 78 and 80. And then once the stops came out, boom, you got to move to 85. The pullback was defended, and then boom, you got another move into 90, easily surpassing 87s, shifting 5-day VPOC as well. So again, another one that just laid it out nicely. The NQ, Obviously, we've had this one pegged with 40.35 for some time, but again, if you look at the pre-market playbook for this one, um, here it is, 40.35. You know, and I tell you the bull position and the bear position. Bears are trying to defend 61s and trying to run stops below 35s, and the bulls are defending 40.35 for a shot at higher price levels into 61 and 80. What did I say? 87. 87 was the top of 5-day value, which is now shifted down. But clearly we've gotten there. So if you look at the real chart, here's 40.35s. You know, you get down there, you test it, you get a huge buy imbalance that comes in. That's that volume bar right there. That's a huge buy imbalance. And then price pops back above 35.5 and rallies to 61. And then I had 87 because that was 5-day value high, but here's 5-day value high at 83.5. So to update that analysis, that trade would be complete now. And that's a move of 50 points here with 6 ticks of heat. So if you want an overview of how I usually approach the market, the types of analysis I offer, this is it. You know, simple analysis, simple stuff. You know, this doesn't look like much on the chart, but it's a playbook where you can really identify where the bulls and bears are trying to position themselves. And all you got to do is see who's winning and which side you want to be on. And from there, you got key levels in both directions because both parties are at work. These are the market forces every single day. And these are the levels I provide every day for premium. This is the way I've done it for, you know, all year basically. So this is I'm continuing to offer better stuff as well with regards to more of these types of books for broader products. But this is it right here, and it doesn't look like a whole lot, but it's very simple, and it really identifies those key lines where the market players are at work. And once you combine those key levels with order flow, reading the footprint chart, and being able to identify what's happening, you know, if the bulls are influencing or getting trapped, or if the bears are influencing or getting trapped, then you're able to get a much better idea of what's happening at these lines. Really makes trading and analysis much more fun, obviously much more engaging and profitable. So that's what I wanted to show you right now with regards to the premium analysis during today's session. You know, the 3 key ones that we looked at here, they all knocked it out of the park by far. And, you know, just the first move in crude alone, that 1-point move up off that 91.10 up to 92s, just that alone was $1,000 on one contract. And I think most pros will use more than one contract because you got to scale to limit your risk and cover yourself. So again, right there, that first move already was able to pay for a whole year of my premium membership and even that Masters. So this stuff right here is what we do every single day. I'm documenting it much more on the website, so you'll be able to go back and study these charts and see how I do it. But I just wanted to give you an idea of how I looked at these things and how they played out for the current session. I'm very happy with the results. And in about 4 minutes here, I'm leaving to go to my first parent-teacher conference for my 5-year-old. So we'll see how that goes. But everyone have a great rest of the day, and I'll see you all tomorrow. Take care.